I want to make one thing absolutely clear. My outlook remains positive overall. Bitcoin staying above the 100K mark is no small feat, and we're starting to see liquidity slowly return. There are still some significant events ahead that could further influence the market. Despite the online drama between Trump and Elon and the market showing signs of weakness, I haven't changed my stance. That said, optimism shouldn't blind us to reality. Every bullish cycle reaches a peak, and no one ever predicts it flawlessly. What separates inexperienced investors from seasoned ones is simple. The former ride the wave without a plan, while the latter remain cautious and prepare for scenarios where things don't go as expected. Personally, I want to be ready if this upward movement loses steam, and so should you. This isn't fear-mongering, it's a realistic look at what's unfolding. I'll walk you through the exact indicators I'm watching closely. Not because I've turned pessimistic, I haven't, but because smart investors don't just hope for the best, they brace themselves for possible downturns. Honestly, I debated whether or not to even make this video. The crypto space can be brutal to anyone who dares speak of caution when the crowd is chasing moonshots. But I owe it to this community to offer something more than echo chamber hype. While the media floods us with bullish stories, rising money supply, Bitcoin reserves, signs of ETH BTC reversal, ignoring red flags is a dangerous strategy. You must stay informed, vigilant, and nimble enough to act if conditions flip. So go ahead, hit the like, subscribe if you haven't yet, and drop your thoughts in the comments. Are we seeing the final phase of this bull run? Or is the real rally just getting started? Either way, let's dive in. We'll get to the Trump-Elon saga in a minute. But first, let's look at Trump's recent crypto push. His rhetoric has escalated, from promoting strategic Bitcoin holdings to making America a blockchain haven. His family's involved too. Melania's token, Eric co-founding a mining operation. Sounds like adoption, right? But when prominent figures go all in on crypto narratives this loudly, historically it's often been a sign we're nearing a cycle's end. Remember 2017? Hilton, Mayweather, and others hyped ICOs right before the crash. In 2021, it was Kardashian, Damon, Brady, and even El Salvador's president legalizing Bitcoin. Huge moments, but they came at the tail end, not the beginning. The louder the hype from big names, the closer we often are to a reversal. Eric Trump even inadvertently called the local top by praising ETH in early February. Soon after, it dropped nearly 40%. Coincidence? Perhaps. But it's hard to ignore the timing. Trump launched his meme coin in mid-January. What followed? A steep ETH decline. Again, could be a coincidence or it could be a clue. When someone as media-savvy as Trump leans hard into crypto, ask yourself, is he leading the charge or capitalizing on crowd euphoria before exiting? And if I'm being honest, the crypto space felt more grounded before this political circus. Agree? Disagree? Share your thoughts below. Now, on to the chaos. Trump and Elon, once united forces in the meme-fueled market, have turned on each other, and it's playing out publicly. Elon recently slammed Trump's economic policies, calling his spending plans outrageous. Trump, in return, ridiculed Elon's concerns, suggesting they stemmed from selfish motives like tax breaks or NASA influence. Then came the bombshell. Elon alluded to Trump being entangled in the Epstein scandal. That alone triggered a notable market dip. Here's why this is more than just gossip. Elon, who had been a pillar of crypto enthusiasm, is now distancing himself from it, while Trump leans into it harder than ever. This polarization risks turning crypto into a political battleground, stripping it of the fun, chaotic energy meme culture brought. And when the biggest narrative drivers publicly clash, it fractures sentiment. This kind of narrative disruption often precedes market tops. It doesn't always look like a sudden collapse. Sometimes it starts with disbelief and confusion, and this is that moment. Chaos shakes confidence, and the market doesn't respond well to shaken confidence. Let me say again, I remain optimistic about crypto's future. This isn't a flip to bearishness. It's a strategic mindset. Smart investors always account for downside scenarios. Planning an exit, even if you never use it, is far better than scrambling in a downturn. If you read the comments under this later, you'll probably see people accusing me of spreading fear. But in a space where you're either hyper-bullish or labeled a doomsayer, we need voices that acknowledge both sides. Constant bullish cheerleading without considering risk is irresponsible. Let's push forward. The next indicator is arguably the most concerning. Michael Saylor, the face of corporate Bitcoin enthusiasm. His company, now rebranded as Strategy, just announced another wave of Bitcoin-backed convertible bonds. Billions of dollars, zero interest, due in 2029. This isn't just a Bitcoin purchase, it's a high-leverage bet on future prices rising. He's borrowing to buy, which carries the danger of forced selling if prices fall too far. Should Saylor's positions get liquidated, it would flood the market with massive sell pressure. And in a turbulent climate, like a public feud between crypto's biggest champions, that possibility becomes more real. Not to mention, these complex leverage plays usually show up toward the end of cycles. Remember the UST/Luna fiasco? The GBTC premium collapse? Both were late-stage signals right before market crashes. When the logic shifts from price going up to price must go up or everything collapses, we're treading on dangerous ground. These patterns of financial engineering are often desperate moves to keep momentum alive. And to those who say Saylor is a billionaire, so it must be safe, don't forget, major financial players have fallen before. Lehman Brothers, Bear Stearns, FTX. Wealth and failure aren't mutually exclusive. Now, let's examine another red flag, Pump.fun. The platform where meme coins are born and buried within hours. Now they're launching their own token. Think about that. The casino is selling you the chips. According to data, only 5 wallets made over $50,000 on Pump.fun last month, out of over 300,000. That tells you something. When the platform itself starts monetizing its ecosystem, it's often a sign the insiders are looking to cash out. When everyone's euphoric, smart money exits. If you're buying in at this stage, odds are you're buying someone else's exit liquidity. Another concern? Scams. This is prime hunting season for hackers and phishers. The excitement of alt season leads people to take risks, checking portfolios constantly, clicking on links they normally wouldn't, engaging in communities without caution. If you're using public Wi-Fi, clicking random DMs, or managing your wallet in unsecured environments, you're vulnerable. And now, the biggest issue, the charts. Bitcoin has printed what appears to be a double top, eerily similar to 2021. We saw surges of euphoria, followed by corrections, and now we're struggling to hold new highs. I've said it before, failing to maintain 110K is a concern, and I'm starting to worry because the patterns aren't just rhyming, they're repeating exactly. And even before the public feud, signs of weakness were already showing. Total 3, the index tracking altcoins excluding BTC and ETH, is slipping. Alts are struggling to hold any momentum. Combine that with the narrative chaos and the weakening charts, and it becomes clear. We might be at a very delicate point in the cycle.